So I'm Peter Holtz. I am a CPA. I've been a CPA for about 40 years. I'm also a certified tax planner, and I have a CPA firm in California. It's got three offices in California, one in Boston and one in the Philippines. And what we do is we help people to minimize their taxes. And usually we work with medium, small business owners and founders and so forth to make sure that they can keep as much of their tax as possible. One of the things we want to talk about a little bit is the recent tax changes in One Big Beautiful Bill. I'm going to let you guys introduce yourselves a little bit.
Check, check, check. All right. Hey, my name is Will Little. I'm an early stage VC based in the Seattle area. We have about 60 portfolio companies. We write checks between 100 and 300K. We're usually the only institutional capital in for the first couple of rounds. And yeah, the topic today is very important because founders actually don't often plan for success and huge windfalls, secondaries as they go and raise additional rounds. And treasury management and dealing with this from a tax perspective actually really matters. So thanks for having
Absolutely.
me.
Oh, you got one.
Good afternoon. My full name is Badawi Fouad Touaik. I go by BD for short. By design, I'm actually a chip designer. I started my career in semiconductor, moved to the Bay Area in '06, and I actually exited tech in 2019. We set up a fractional family office in 2022, and now we're a full-time investor. For me, the journey around taxes kind of came by coincidence, just by realizing how much taxes you paid in California. I was a real estate investor since I was 21, even though I designed chips in the day. At night, I really enjoyed real estate, and then started really discovering all the tax stuff from real estate, which really kind of got me into becoming a full-time real estate investor.
Awesome. Thank you. And Will, we talked a little bit briefly about this in terms of how do you go ahead and work with your founders to educate them a little bit on the tax process?
Well, a lot of the founders just use their uncle for their tax. The
Yeah,
uncle may
there you
not
go.
know what's going on. So the first step is just find somebody who's very competent from a finance perspective. Like use your AI agents to get all the other things going, but save money so that you can hire the right person to do that tax prep very early and often. You basically can't talk enough with somebody who knows what they're talking about as you're preparing for both your yearly taxes and then especially when more complex things come on your roadmap.
Sounds great. Meaty.
I would say my experience in startup was actually the exit that we had in 2015, where Memoir Systems was acquired by Cisco. And we were fortunate enough, actually, the first key founders already, that's their third startup. So they already knew the ways around it. So they actually structured a QSBS, which is a
Awesome.
qualified small business, which basically allows us to actually exit with very, very minimal taxes
Beautiful.
as far as an exit.
Yeah, the QSBS really was expanded under the Big Beautiful Bill in 2015, and it is a great thing that you can avoid $10 million in capital gain. Okay, so that is a phenomenal way to do things. If you're a C corp and you have that C corp for 5 years, it's a great way to do it. A couple other things that impacted us in the tax world in 2015 was the return of 100% bonus depreciation. And also, if you are putting together a manufacturing facility, this is something a lot of people don't talk about. That manufacturing facility can be written off in its entirety in the first year if you build it through 2032. So it was one of the things that the administration tried to do to help bring manufacturing back to the US. So I wonder if you guys have seen any type of impact from these particular elements of the Big Beautiful Bill in terms of the bonus depreciation or the Q. We talked about the QSBS or anything else like that.
I mean, we've noticed there are a lot of states, so both at the federal, state, and sometimes at the city, county levels, there's all kinds of incentives that a lot of angels VCs aren't aware of.
Yeah.
All types of tax breaks that if you haven't thought about that yet, either from a founder to tell your investors that because you can raise more money that way, or as an investor, you could do some homework because there's some serious money that you can save by taking advantage of those.
Yeah, and I would say for me, frankly, the Big Beautiful Bill is probably one of the best things I've seen has come
Sure.
in that affected as far as taxes. Especially, we're very real estate heavy office, because they really brought back what we call accelerated depreciation on real estate. So imagine you're buying $1 million property, and that's an investment property. You can run cost segregation, accelerated depreciation. and now you have about 30% off with the purchase price, that you can actually depreciate. So that for us, that was actually huge, because at some point you start using all the depreciation to offset your taxes, and then you start looking for more depreciation. So start buying more and more real estate. And that's the reason we see families that get into real estate, the reason they cannot stop, because you have to continue. There's also other ways we think the beautiful bill added, but I would say taxes is one of the least taught. How many people here studied ever taxes? I actually read the tax code in COVID because I was just so
me.
frustrated with CPAs. Luckily, I just found this
That's why
fine
we
gentleman
hire
here.
you.
Yeah, exactly.
I just, as an engineer, I wanted to go figure it out. I was like, this shouldn't be so hard. I have an MBA. I understand the basis of accounting, but taxes is just the complicated forms. But if you really think about it, actually structure isn't so bad. But we just have to take the time to learn it, or go seek professional help to go do it, because you could save taxes at the entity level, you could save taxes on your personal LLC level, and then all the way down to certain investment that you can do, like oil and gas, or get tax credits and so forth. So there's definitely multi-layer you can do. But if you're intentional with your taxes, you can really get your taxes to zero, at least at the federal level. California gets a little bit tricky.
So I have a question for you.
Sure, go.
Do you feel threatened at all by the AI, the big tech coming and taking away
No,
budgets going
actually,
your way?
the last couple of days we were at a tech conference or AI conference on tech, where we were really exploring software. The tax process of filling out the forms, that most tax people that you talk to are what I call box fillers. They put numbers in the boxes and they tell you how much you're going to pay and when to pay it. That's all they really do. That whole process is going to disappear probably within the next year. Okay, we believe in June. In June, we're going to be implementing this software to be able to automatically do the tax return. So then, our only part we have to do is making sure we get all the right documents in and doing the review. So definitely not, because what it's going to let us do is what we love to do, is actually tax plan. I should be able to, the AI agents, and use them properly to be able to create an annual tax plan for you, a 3-year tax plan, a 5-year, up to a 20-year tax plan, to really show you what can happen, not only for your taxes every year. And Will brought up a really great point. As a founder, it's so critical, and as an investor, it's so critical to minimize your taxes, because that's money you want to use to continue to grow your business. But anyway, we should be able to take this all the way up into the estate planning for your family offices and everything else like that. So I think that the tools, and we are proceeding at warp speed, or whatever we want to, whatever term you want to use for it, to totally implement this strategy, because we want to make sure that we are doing like 99% advising and 1% of putting the numbers in the boxes, because that's not a value add. Okay. So I think the industry entirely is going to be like flipped. I don't know what's going to happen to everybody, but like we were talking too about the fact that so many people that are just these box fillers, they never talk to other people. There's a lack of great communication in the whole finance tax structure.
It's true. And I think tax planning is intentional, means you have to really start out by thinking in an investment. How does that impact me? Should I invest from my retirement account, or should I invest from my cash? Or is there a depreciation benefit? So a lot of those things you want to be having the dialogue with your tax professional. So what happened for me, just from being a W-2 employee, working in tech, getting stock options, you start getting to the point where, like, oh my God, I'm just working Monday, Tuesday, and half of Wednesday for the government, and the rest of the
Sure.
days for me. And that really what drove me into, hey, I need to go figure out a better way of how doing it. Luckily, I realized, I was like, I have all these real estate, but I'm not necessarily using it the right way. Started looking at short-term rental loophole, and then at some point, advance a little bit further. Believe it or not, there's a lot in the tax code. And it's really up to each one of us to find the right tax professional. Not to make jokes on CPAs here, but bad CPA, I call them, CPA stands for copy, paste, attach. So if you want somebody who does copy, paste, attach on your tax form, you go to a regular CPA.
Back in the day when I started, it was copy paste artist. That's what it was. Yeah, exactly what it was.
But if you want somebody to do justice to your taxes,
Yeah.
this fine gentleman, I'll tell you.
One more quick question. I'm curious.
Go.
So founders are using their AI to do a lot of the bookkeeping, controller work, AR, AP stuff. What do they need to watch out for? Because they're trying to save money, right? But what are the dangers of doing that?
I think the most important thing they need to do is make sure that they have somebody reviewing the numbers, and making sure that their numbers make sense. And it's really, the key is you need to have somebody that understands the balance sheets and what should be there on the balance sheets. If you do a great job of watching your balance sheets and knowing what's supposed to be there and making sure it is there, then you're going to have good numbers all the way through.
Yeah, and I would say be intentional. To give you perspective, we started planning 2026 taxes in September of last year. We're actually not going to file 2025 taxes till September of this year. So there's a lot. And I thought like filing extension was a bad thing. And then I
No,
just realized that when you're actually working with your tax
it's the
partner,
best thing.
it's the best thing ever, frankly, because it just gives you more opportunity, more options in terms of how you funnel income across the various different buckets. Now,
Exactly.
you don't have to, it's 100% legal. You just need to understand the problem you have, work with a professional, have them really point out. And net, if you're not happy, and we don't have to get political about it, if you're just not happy how tax money is being spent or whatever it is, use it as a driving mechanism to actually make sure you get your taxes
Absolutely.
taken all the way to zero. You can donate up to 60% of your income into a private family foundation. You can control how that money is actually donated. At the end of the day, we work hard, and it's okay to pay taxes to help support the government and everything else. But at some point, you're like, hey, I don't really like money to be spent this way. I'd like it to be spent a different way. And believe it or not, all of us have that choice.
There is absolutely no reason to pay what you're more than you're legally required to pay. And then you need to use the law. The law's there for a reason. Everything the government does in the tax code is it like depreciating, appreciating real estate. Okay, that's a way the government makes sure that their buildings are people to live in and work in. It's everything in the tax code has a reason.
And when you think about tax code, it's complicated. It's actually one page that breaks down. You make this much money, you pay that taxes, you pay that much. And then at some point, there's all these exceptions. So it's really about finding all these exceptions that apply to you. And believe it or not, there's like 10,000 pages of all these exceptions.
It's amazing. Yeah. I think we're out of time. Is that correct? Okay. Well, thank you very much. I don't know if anybody has, do we have question time or not question time, guys? Go ahead. It's up to you. Because BD knows all the answers. We know that.
BD paid a lot of taxes.
BD
It's payback.
Yeah, exactly. Anybody have any questions? Yeah, I mean, it used to be that you had to hold your C corporation for more years, right? So once you get to 3 years, you can have a 60% exclusion on your capital gain. 5 years is 100% exclusion. I believe it used to be 10 years before that. So what if you sell your C corporation, and it has like $75 million in terms of total assets. If it's under 75 million in total assets, you have a no capital gain up to $10 million. Okay. And it's per shareholder, by the way. Yeah. Oh, yeah.
Any advice for offsetting W-2 income?
He cannot give you legally an advice because you're not his client, but he can give you a whole lot of ideas.
Purposes
Not
only.
for me specifically.
Yeah.
He
I
give
mean,
you
W-2 income is just, I mean, they got rid of most of the deductions for W-2. So it's really, really brutal. You obviously short-term rentals, you can do some things like that, and you can do, family foundations and charitable foundations and different things like that. There's a bunch of different things that you can do on your Schedule A. The best thing you can do as a W-2 is switch to 1099.
So
And be
question
a
with
side-
that, if you're
create a
like
side-
I am a founder myself, so
Okay.
it's not necessarily for me specifically, but if you do have W-2 income and you start a say home-based business or something like that,
Yeah,
can you offset your
exactly,
W-2
exactly.
or do you still need
Well,
to
you
pay
can
yourself
you
the
can
1099?
create, depending on what you create, you can create different ways of writing off some of your other expenses through running a separate business, like your side hustle business or whatever you can do. A lot of people do that. Or sometimes you have married couples, for example. My favorite married couple is an airline pilot who has a W-2, very substantial W-2, and his wife is a real estate professional, and they invest in real estate and they take all the depreciation, so he pays no tax. We actually made an airline pilot a real estate professional because by definition it's a part-time job. They can only fly 20 hours a week. So yeah, this guy actually gets all his money back every
He
year.
checked all the boxes,
Yeah.
right?
And it's like we went up against the IRS on that one. They said, no way. You
No,
have a whatever multi-$100,000 W-2. There's no way you can do that. And it's like, no. But they're airline pilots, so they have contemporaneous records. They keep track of everything because they're airline pilots, right? So
net, as you scale up your income, figure out how to upgrade your CPA and get somebody that really understands
it's a really
how to take those strategies.
Thank you, BD. I appreciate that. But it's really true. Okay.
I would say caution. There's a lot of actually investment strategy that come for with tax purposes. Caution yourself, not from a tax standpoint, because sometimes it's not a good investment. Yeah, it is a tax offset. So don't let the tax tail wag the investment dog.
It's a really, really good point. Really, really good point.
So that's been there, done that. So
Peter Holt CPA. .com. Peter Holt CPA, yeah. So you can look me up online. I've got there's a bunch of stuff on social media too. So
yeah.
A lot
By
of
the way,
strategies.
pay your kids. If you have kids under 18,
yeah.
you can pay them from your corporation and they can take that without paying taxes, and you can take half the money and put it in the Roth from ages 8 till 18.
Correct.
And let that grow. There's a significant amount of stuff, but there's not one magic pill that makes your taxes go to zero, unfortunately. So it's about layering multiple strategy.
Absolutely.
So I have a question. So we have lots of growing portfolio companies. How should founders think about optimizing their spend? Because I've seen portfolio companies spend a lot of money on tax and finance department stuff, and I've seen a lot of spend not nearly enough money. Like, what are some guiding principles for founders as they're growing their companies?
I think what they want to do is keep their finance spend really because it's an overhead, right? So you want to make sure you maximize the money that you're putting into growing that core business, right? So as little as possible, I would outsource as much as possible from a finance perspective. Use AI, definitely, right? And then from a tax perspective, I think you want to invest at the higher level of people that can actually give you the advice and consultation you need. You do not need anybody that used to work at an H&R Block or basically a box filler. And I'll tell you how to tell what a box filler is. If they don't come to you with a suggestion on how to save money on taxes, at least one, it's the wrong person to work with. If you've got to go to them and say, I know the Augusta rule, okay, or I heard about the Augusta rule. Oh, by the way, I actually met a real live Augusta rule guy, which is like he lives on the 7th hole. This is the first time I ever met somebody of the Augusta National Golf Club, right? The Augusta rule lets you rent out your house 14 days a year tax-free, right? So they rent out their house. A lot of people around the Augusta National Golf Course rent out their house, $37,000 for 2 weeks. It's tax-free money. And they go out, and he actually has multiple houses. So he just went to another one of his house, right, to take care of it. But it's the first time I met a real, and he was complaining to me because the guy on the 9th hole got $80,000. So, yes, sir.
What's the best strategy on the secondary shares that we're getting from the investors? How do you play with the tax consequences? What's the best strategy?
You want to make sure you have your basis set when you do it, and I think it's going to depend on really how those shares are coming out. You know what I mean, and how they're being sent to you. But you want to make sure. I think it's the 82. I don't remember actually the name of the form that you have, but you want to make sure you get your basis set so you can make sure it's not ordinary income and you maximize your capital gains.
Does that require 1 year hold as well, or no?
Yes, it does. But there's also, if you're investing in multiple companies, like where is your investment company going to be? Okay, is it going to be in Texas? Is it going to be in Nevada? Is it going to be in California? Is it going to be in Florida? There's other things you can think about because you can have a C Corp that's your investment company, right? That can help you to avoid some of the problems in California, 13% tax or whatever. So a lot of opportunities to really think about things differently.
And that's where you would want to work with like a full-fledged firm, because to start, the bigger knobs are structuring. if you
Yes.
structure things right in terms of how the income is flowing, that's the big knobs. And then the different layer of the different tax strategy are the smaller knobs.
You're exactly right. The number, you know what the two ones are? Structure and accuracy. People don't get their numbers right, and that's the biggest deal. They don't write off everything they should write off. They don't even think about it.
Is there any reason to have human bookkeepers anymore?
You know, I have a lot of human bookkeepers, and some of them are going to go away, actually. But they're you know what the biggest reason is going to be to have human bookkeepers is to get the data from the people that have the data, right? So get the data from, go to your founder and say, where's the lease agreement for this particular car or whatever. That's it's what's going to actually happen is you're going to have people that are intake people and then the reviewers, and you're not going to have anybody in between. So the bookkeepers will disappear, and you'll have your organizing people that will get all the data that you need into your process. Because AI is business process engineering, really is what it is, which really, I mean, I've done that since I've started my career, right? But it's really automatic business process engineering. You're going to have people getting the right data in, and then you're going to have people reviewing the data to make sure it's right. And then people saying, and that part of that review is how do we structure this in such a way so that we make sure we minimize our tax situation and we save money, right?
Would you just give your clients skill files and templates and say, hey, tell your AI to do it this way?
We will do that. And I think we work with a lot of small and medium business owners, and I think we're going to need to, the biggest thing we're going to have to do is teach them exactly that, right? What they need to get, what data they need to get in.
Yeah, Peter,
You're
we
welcome.
have a few, please, we're gonna give you more time
Okay.
because the next speaker is not here.
Ah,
And you're actually the last show
we're the last show.
before our closing
Right.
remarks.
Thank
So
God for my show partners.
it's
Otherwise,
all
I'd be in
because of them,
trouble.
right? So we can spend a few more minutes to address more questions from the audience. I got one question for you.
Yes.
Let's say hypothetical situation, right? The wealth tax, billionaire tax is going to get passed in California. Let's assume that our mutual friend Steve Hilton will not win, and then the current party is going to keep on governing, blah blah blah, right? All the craziness. And let's say that you got a friend who wants to move to Tennessee, Texas, Florida, etc. What would you advise to your friend on what you need to do by when? In terms of tax savings, right?
Yeah. I mean, I have many clients that have left California, have moved their operations out of California. I mean, you have a lot of companies that are essentially virtual companies that could relocate without any. They have no nexus in California, right? Because if they're virtual companies, I have a guy that runs like the private coaching Uber for private like sports coaches. So it's like an Uber for private sports. He actually lives in Eastern Europe, and his C corporation is based in Nevada. So he's minimizing his taxes because he's a foreign national. No, sorry, he's an expat and not paying taxes on his W-2. But he moved his operation to Nevada from just being in California. But I think it's just insane. I mean, to think that you can first of all, the last thing government ever does is we're only going to charge this tax once, right? When's the last time? Then was the first time that say we're only going to charge this tax once, right? Bullshit. It's just never going to happen. They're going to do it again and again and again, and it's going to create a tremendous flood of people leaving, and a tremendous amount, and it's crazy. Doesn't and it's like people when you see the politicians on wherever you want to see them on, they're basically saying, oh, it's not going to be that bad. Or who was it? Was it the mayor of Portland or was Seattle? Was like, let the rich people go. We don't care. I don't know.
Sounds like both of them.
That was both of them. Huh?
Yeah, they are.
That's kind of your area, right? Okay. So yeah, it's like let them go, right? Or Mondami would tax the rich or whatever. I mean, it's going to be a tremendous impact. I mean,
I think this whole myth thing about tax the rich, because if you really look at higher net worth people, they actually pay a lot less taxes. And the reason is because they have professionals that look at every exception they would apply for, and they actually pay. Where people pay majority of the taxes and they start making over $100,000 and maybe under $300,000. I think that's where probably they end up paying the most amount of taxes.
Right.
But the bad news is tax evasion has no statute of limitations.
Mm.
So that means if you avoid paying
For fraud.
taxes and they go back, they can actually get you. So
If they can get you on fraud,
pay your
yeah.
taxes or work with somebody professional.
You really you need to apply the appropriate tax strategies. That's probably the most important thing that you could do. And just make sure that you're legal, right? Make sure that you take advantage of everything you can, and structure yourselves correctly. You pointed out structure and accuracy, and then you have all of the loopholes: Augusta rule, paying your kids, taking your cars, or other little deductions. But really, those top two are the big ones.
I want to get back to the whole bookkeeping thing that you
Yeah.
talked about. I mean, I'm a techie, so I'm quite excited about not having to deal with my bookkeeper,
Mhm.
even though he's actually quite a pleasant guy out of Bangladesh, believe it or not. I already started farming that for certain things,
Sure.
for like the personal stuff. But what are your thoughts in terms of how good AI is getting to the point that the average, the grandpas and the 50-plus-year-old people would no longer need to do bookkeeping? Because I'll tell you, for a lot of small businesses, it's a big expense. If
It
you're
is a
running a
huge
restaurant and you're running very low margin these days in terms of profit margin, believe it or not, bookkeeping is a big chunk because it's a very high transaction type business. Where do you see the verticals that's likely to be maybe
I
satisfied?
mean, the main theme right now, right? I mean, Sequoia published that article a couple months ago, and we're seeing it. We used to see the progression from services to productized services to products. We're now seeing the great unwinding. We're seeing products to productized services back to services. So if I were a tax prep software right now, I would be freaking out because the ability for any of your popular AIs out there to replicate something like that, and then probably somebody like you
There
would
are-
then take a look at it and then save a lot of money potentially, right?
There are two people we evaluated, okay, or two software companies, AI-enabled software companies evaluated that can produce 2025 extended returns in June, okay, and July, the 1040s, 1120s, 1120s, July. It's done. It's over, okay? So if you're in the tax prep business, all of these people out there that are the box fillers are it'll maybe, I don't know how long it'll take, a year, 2 years, 3 years, but they're going to be gone. And it's going to be replaced by really, I think, advice and then the expansion of financial services because quite honestly, CPAs, in my opinion, of course, I might be a little bit biased, but CPAs, I think, can bring a lot to the table if they really, really focus on those companies, trying to help them be successful, understanding their margins, understanding their profitability, looking at cash flow, looking at a budget, at things that restaurants, you're absolutely right, restaurants and small business owners. So, I mean, the history of small business ownership has been like, what, 20% survive 5 years? And a lot of it is because they just don't know their numbers. I will tell you one story of the saddest story. I had one of my clients that I met, or was a potential client, built pools in Danville, California, which was he built works of art, really, more than swimming pools, right? And he was 64, 65, and dead ass broke. And I'm looking at this guy and I'm going, his family hated him. His house is in foreclosure. How did you build works of art for rich people and lose your entire livelihood? And he did that because he didn't know his numbers. And that's really what we should be doing as CPAs, as financial professionals for business owners, is helping them become more profitable. Because I know, in the founders you work with, they all know what they need to do, right? If you're a coder, or you're a AI guy, or you're a restaurateur, or whatever you are, right? Whatever you are, you know how to make great stuff, but you don't know what your numbers are, and you don't know how to deal with the bullshit that comes from with different governments.
Actually, I got a good story here. Maybe it'll take 2 minutes, but we invest into a lot of commercial real estate where we're bringing restaurants.
Mhm.
We buy older distressed restaurants, and every time you want to go interview a restaurateur, they're doing great. They have Yelp reviews. You're like, can you show me your book so we can write a lease? Because you have to vet how good this business is before you're writing a commercial lease with them, because you're signing up for 10 years. And I'll tell you, their books are a mess. And why?
Yeah.
Because now we have non-tech people that have 6 different POS systems. POS system is point of sale system.
Exactly.
Because they have the POS system at the store, they have the DoorDash, they have the Uber Eats, and now all of a sudden there's like these verticals of data where their income and expenses is, and it's a mess. So believe it or not, actually, we took all their data, we ran AI scripts on them, and we actually generated a P&L for them. And I was like, wow, that would be a nice software if somebody literally do a dedicated bookkeeping software for restaurants integrated with POS system across all system using agent. There's significant opportunity to actually go solve real problems.
Exactly.
In simple small business. It doesn't have to be a massive company and a $10 billion exit or whatever it is. Just go solve real problems and charge these people like a SaaS fee or whatever. There's incredible opportunity, I think.
So I have a question for the both of you. In light of how fast everything's changing, AI, regulation, what questions can you ask to know whether you have a good tax professional or not? Like how can you tell whether they're good?
I think like the key when I said if they come to you and if they tell you no, okay, like you can't write that off, and they don't tell you how to write it off, you have a problem. Or if they don't come to you with a suggestion of what you can do, or they don't come to you with, where is your data? Like kind of what BD just said. I mean, that is the perfect. That happens every goddamn day. You know what I mean? It's the perfect example of people that are beautiful people making great food and losing their ass because they're
Data
like
siloed. They're data
the
siloed.
data silos, right? So I think how can you? I think the thing you really got to ask them is how can you help me make this situation better? Is really very simple. What ideas can you come up with? And really, I mean, what we do, we look at tax returns, or maybe look at 1,000 tax returns a year. Every tax return we do a tax plan on. We show people how they can save money before we start working with them. And if I save them 40%, they're like, yeah, okay, we need to come with you.
Yeah, I would say this is not how I started because I was just a tech guy. And at some point, bring all my paperwork. It's like, okay, file the taxes. I look and I cry about how much taxes I paid. And then as I've changed over time and realized, hey, you have to be more proactive with your tax. You have to be more intentional. You have to find the right partner. And it takes a while to find the right partner.
Absolutely.
And I'll tell you, it takes even harder work to shift partners, especially if their level of service starts to decline over time. We just have to switch over firms. And we're just telling you about it, how painful it is.
It is.
It's like you're used to going to a dentist. It's painful to switch to another dentist.
Yeah.
But at the end of the day, you need to be intentional with your taxes. You need to have a good idea where you're likely to have your income sources for the year. If you're about to have an exit or a big sale or something, you need to be telling them all throughout the year. So don't wait until tax filing the following year to actually, go help save me some taxes. Be intentional. Talk to them more often. Involve them in some of your decision making, just like you involve your lawyers. You want to involve your tax professional.
If you're in California and you're making decent money, it's 48% of your income. So it's hell worth it. Hell of worth it.
It's more like 55%, right? Federal, state, and plus other things.
Yeah.
With
Hella
that,
worth it.
And that's a
To
wrap.
use the NorCal term, right?
That's it. All right, Peter, great job, guys. Okay,
you so
thank
much.
you very
Thank you.
much. Thank you very much. That's right. And one key point here is really quality preparation and planning. Without quality preparation, don't expect quality results, right? That applies to anything in life. That's important, isn't it?